Are you ready to discover the top 5 clean energy penny stocks to buy on sale? As the world moves towards sustainable energy sources, investing in clean energy companies has become a hot topic. While penny stocks can be high risk, they also offer the potential for high rewards, making them an attractive option for investors looking to capitalize on the growing demand for clean energy. In this video, we'll delve into the most promising clean energy penny stocks that are currently on sale. From renewable energy producers to innovative technology companies, these stocks have the potential to deliver significant returns on your investment. Last year, clean energy stocks were all the rage, with the Clean Energy Fund earning a 177% return after a big drop in February. These stocks are now on sale again, and I'll show you how to take advantage of the best opportunities. So, get ready to explore the exciting world of clean energy penny stocks and discover your next big investment opportunity. But before we go into that, don't forget to click the like button, hit the subscribe button, and ring the bell icon. Now, let's begin. Renewable energy stocks did better than electric vehicles, self-driving cars, and even the amazing 170% return on the ARK Innovation ETF. Those same clean energy stocks are now down 24% since early February, and a quarter of the fund's value has vanished into thin air. Clean energy stocks could be one of the strongest themes over the next 10 years. The day he took office, one of the first things President Biden did was cancel the Keystone XL pipeline. The push for green energy will be a key part of the administration. Clean tech is at the center of the $2 trillion infrastructure spending plan, and Biden has laid out 9 steps he wants to take for this green energy trend. Prices for clean energy technology are going down, and a 51% rise in the price of oil and other energy costs in the last 3 months is putting the spotlight back on alternative fuels. The U.S. Energy Information Administration predicts that the U.S. will use 13.4 quadrillion BTUs of renewable energy in 2020, which is a 17% increase from 2019. That trend toward clean energy is now unstoppable, and with the U.S. rejoining the Paris Climate Accords, it's only going to get stronger. When investing in big, multi-year themes like EV stocks, biotech, and clean energy, I like to start by adding a couple of funds to my portfolio. I do this for 2 reasons. First, since the theme we're looking at will benefit from broad trends, we want broad exposure. Putting some of your money into a clean energy fund will give you access to the whole group and a lot of stocks that might not be on your home stock market. These funds are also great places to start looking for individual stocks in the renewables sector. You can find an ETF on any website. Click on the Holdings tab in the menu to see a list of clean energy stocks you can learn more about. The first one is the First Trust Clean Edge Green Energy Fund, which is one of the biggest. The ETF invests in 44 companies that work with solar biofuels and advanced batteries. Shares went up a huge 183% last year and have returned an average of 16% a year over the past 10 years. This fund is diversified because a third of it is in equipment suppliers, 15% is in cars, and 15% is in alternative energy, but it has exposure to 10 different industries. Here you can see the top stocks held, with Tesla at the top and making up 9% of the fund's assets. You can also see some strong green energy stocks, such as Plug Power. The fund is a little pricey, with an expense ratio of 0.6% per year, but that's typical for theme investing. You won't get the same 0.2% expense ratio. The Invesco Solar ETF ticker TAN holds 37 solar energy stocks and had a 233% return last year. The fund is mostly invested in the tech stocks that make this possible, but it also has a third of its assets in utility companies. The solar ETF is a little more geographically diverse, with just under half of the stocks based in the US and some exposure to Asia and European companies. Our first green penny stock is Uranium Energy Corporation, ticker UEC, which has a market cap of $620 million and explores and processes uranium for nuclear energy. The spot price of uranium has risen by more than 70% since 2016, and the building of 53 new reactors around the world should keep that trend going for years to come. UEC is a pre-production miner that could produce up to 4 million pounds of uranium per year. It has 3 projects in the US, an interest in the Athabasca Basin in Canada, and a portfolio of projects in Paraguay. All of its projects are fully licensed, and the company could produce 4 million pounds. UEC has recently started buying drummed uranium at the spot price but below industry mining costs. The company has more than 1.4 million pounds of uranium in storage, and its Hobson processing plant in Texas can process 2 million pounds of uranium per year. The company has $95 million in cash and investments on its balance sheet and only $10 million in debt, so its net cash of $85 million gives it plenty of money to put these assets into production. Electromechanical vehicles is a fun penny stock to buy. The main product of ticker Solo, a Canadian EV company, is a single-seat, three-wheeled electric car. This is an untapped niche in the electric space with strong potential in the personal daily use market. The car can go 100 miles on a single charge and can be fully charged in less than 4 hours, which is half the time it takes to charge the average electric vehicle. The car can go up to 80 miles per hour and costs just $18,500. Production started last August and can make 20,000 cars a year. They are currently sold in 10 stores in California, Arizona, and Oregon, with plans to expand to the rest of the West Coast and Colorado. This is another one with a rock-solid balance sheet of $101 million Canadian dollars in cash and no debt. It is a great penny stock play in pollution control. The market for pollution systems is expected to grow from $67 billion in 2019 to $101 billion in 2027. This is because 95% of the world's people live in places where the air quality is bad, according to the World Health Organization. Revenue is split evenly between the pollution control segment and the chemicals technology segment. More than 1,200 control systems have been installed around the world to improve boiler efficiency in coal, oil, biomass, and solid waste boilers. Customers include utilities like First Energy and Duke, industrial users like Dow and BP, and global producers. The pandemic did hurt sales in 2020, but the company has refocused with a better cost structure and expects stronger sales this year. American Materials for Batteries ticker ABML. The company is a pre-production miner of lithium, and unless you've been living under a rock lately, you know that lithium is the metal in tech right now. Lithium demand is expected to grow 40% every year through 2025 because it is used in electric cars, cell phones, and power storage. The company owns 26,000 acres in Nevada and has 1,300 claims around the Railroad Valley Lithium project. Initial surveys show economic concentrations throughout the field, but this is a pre-production company, so it hasn't made any money yet, and it still needs to finish the geological surveys and get the permits. There is definitely a demand for lithium, so the company just needs to get it out of the ground. Beam has a market cap of less than $300 million, which puts it in the smallest third of stocks traded on US exchanges. We're looking for penny stocks with growth potential. For example, if this company grew to the size of, say, Enphase Energy, which is worth $20 billion, investors would get a return of $6,800. Beam makes infrastructure products for electrification, such as EV charging and outdoor media. It already has 2 patents for EV chargers and is working on 2 more, including a charger for drones. 559 million electric cars could be on the road by 2040, but we don't have enough chargers to meet that demand. Beam already has hundreds of products in use across the US, with customers like the Department of Energy, McDonald's, and General Motors. It has 8 patents in the US, China, and the EU. It has $12.3 million in cash and no debt, and it makes $4.5 million in sales every year. In conclusion, investing in clean energy penny stocks can be a promising opportunity for investors looking to diversify their portfolio while supporting the transition to renewable energy. However, as with any investment, it's important to do your research and assess the potential risks before making a decision. Keep in mind that penny stocks can be volatile and unpredictable, so it's essential to have a long-term investment strategy and a clear understanding of the company's financials and growth potential. With that said, the 5 clean energy penny stocks mentioned in this video could be a good starting point for investors looking for potential growth opportunities in the clean energy sector. Click that video on your screen if you like our episode for today. Ring the bell icon so you'll be the first to know when we have new video uploads. Thanks for watching, and see you soon.